Real estate is one of the most exciting investment options out there. Why? Because it allows you to put up very little of your own money and get a huge mortgage from a bank, which brings your return on equity through the roof. But it's not as easy as it was in the last 5 years when we had mortgage rates with basically 1% interest rate. Lucky you, investing in real estate is still a great idea despite the high mortgage rates. If you do it right, of course. And to help you do that, here are 11 very common mortgage mistakes that you definitely want to avoid in this PerFinEx real estate video. Mortgage mistake number 1. Not enough equity. I hate to break it to you, but if you woke up this morning thinking, I should invest in real estate, that's good first of all, but if you don't have the money, it's probably not gonna work. We uploaded a video just a couple of weeks ago on the German Real Estate channel explaining if it is possible to invest in real estate with no money and why it is very difficult. Link is in the description if you want more details. To give you a range, you should have 10 to 20% of the property value that you want to buy as equity. Cash would be the best. Nobody says you need to invest all that cash in the property, that's what we'll talk about later on. But the more cash the better, because banks will probably give you a better interest rate. Especially when you want to buy a home. You need to buy furniture and everything too, right? So just having enough money to buy the property is not enough. One more reason you need cash when buying a property here in Germany, you have to pay additional closing costs. It's mainly 3 different costs, out of which 2 are mandatory by German law. So there's no way to avoid it. 2% of the property value are for the notary and the land registry. That one is mandatory. The state you are buying the property in wants another piece of the pie in ground purchasing taxes. That's mandatory as well. Yes, if you would like to buy a property with the money that you pay taxes on already, Germany is charging ground purchasing taxes. Thanks, government. How much do they want? This map shows the exact percentage and euro amount if you would like to buy a property for 300k. And the last cost is voluntary, more or less. A real estate agent. In the large German cities, nothing works without real estate agent really, so another 3.57 up to 7.14% on top. So closing costs range anywhere from 5.5% up to 15.64% on top of the property value. And that is one of the reasons why we launched GermanReal.Estate, to lower the barriers to entry for you guys to invest in real estate. Check out our marketplace if you're interested. Real estate is exciting and you would like to buy a property. I get it. But don't get carried away, because mortgage mistake number 3 is to buy more property that you can afford. You need to know your limits. Spending 30% of your household net income on housing is fine. 40% is the max. And 50% is the absolute maximum. And I'm talking about all housing costs. Mortgage, electricity, heating, water, insurance, reserves, which we will talk about later on. It's a long list. At the very least, you want to calculate 2 euros per square meter monthly for all the facilities, if your building is brand new. If you have an older building, you better calculate with 4 or 5 euros per square meter monthly, especially with the current prices because of the inflation. Reserves, we just touched on this, is mortgage mistake number 4. If you're the landlord, you have to pay for all repairs and renovations. That's what many of you guys forget when you compare the rent payment with the mortgage payment and come to the conclusion that rent is a waste of money. And the question is not if repairs and renovations are necessary, but when they're necessary. Otherwise, your property will go down and down and down in value if you don't maintain it. So have at least 3 to 5 monthly household net salaries as renovation reserve. And continue to save 1 to 2 euros per square meter per month for reserves. I know we're talking about a lot of money here already, which is the first 4 mortgage mistakes, but real estate is not cheap, guys. The next mortgage mistake number 5 can save you a lot of money. But it's not so straightforward, unfortunately, to compare or not to compare. Many people will tell you to shop around different banks and get different mortgage offers. And I kind of agree. Kind of. Here are two mortgage examples for 100k, one with 3.5% interest and one with 4.5% interest. It's 100 euros a month different and 8,000 euros total interest over 10 years. A big difference for just a 100,000 euro mortgage, isn't it? Here's why I only kind of agree. Sometimes banks will check your credit score, Schufa score in Germany. So if you shop around 5 or 10 different banks and they all request your credit score, your Schufa is for the next couple of months. So rather work with an independent mortgage broker that can check all 700 different banks in Germany with just one single Schufa request. Like us, for example. Let us know if we can help you to finding the best mortgage here in Germany. Now you might be thinking that you should always go for the mortgage with the lowest interest rate, right? That would be mortgage mistake number 6. Because the cheapest mortgages offer sometimes absolutely no flexibility. Think back 10 years for a moment. How was your financial situation back then? Probably a lot different than today, wasn't it? This goes to show you that flexibility is an essential part of your mortgage. Are you allowed to do extra payments, Sondertilgung in German? Are you allowed to change the principal percentage, Tilgungssatzwechsel in German? These are essential elements in case you get a bonus, get a child, inherit something, lose your job, whatever. Life happens. And we're always saying that your financial planning should adapt to your life. Your life shouldn't have to adapt to your financial planning. And your mortgage is part of your financial planning. Flexibility in general is great. When talking about your interest rate, it's not great. And that's mortgage mistake number 7. Over the last 30 years, interest rates in Germany have been falling continuously. If you have a mortgage with a variable interest rate, you would be pretty happy about that. If you still had your variable mortgage in 2021, you would not be happy because your interest rate more than quadrupled in just a couple of months. And when your fixed interest period runs out, mortgages in Germany usually have a variable interest rate if you don't renegotiate with the bank. So if you want security, get a long fixed interest period. Especially with the current conditions of today, when 25 years costs 0.03% more than fixing interest rates for 5 years. Speaking about interest, have you heard about Bereitstellungszinsen before? No? Because that's mortgage mistake number 8. If you buy an existing building, all good, you can skip this mortgage mistake because the seller gets the purchasing price right when you buy the property in one chunk. If you buy a new construction, the property developer gets the purchasing price in little bits. Here's the payment table of the property in Düsseldorf that I bought for you guys from the community to invest together with me. The developer gets the first 30% of the purchasing price when they dig the hole, 2.1% when the heating is done, and another 7% when the windows are in, and so on. Why is that important for your mortgage? Because the bank charges penalty interest on the mortgage amount you haven't taken after a while. So make sure you give your property developer enough time so that you don't have to pay penalty interest, like I did with our property in Düsseldorf. We have seen these two mortgage examples earlier, right? And we were just talking about your fixed interest period. And that brings us to mortgage mistake number 9, ignoring your refinancing. If you check the two mortgage examples closely, you see that you have 70k in one and 78k in the other still left to pay the bank after your fixed interest period runs out in 10 years. The bank wants its 78k back, so you need to refinance after 10 years. If interest rates are down at 2% when you refinance, great, you saved some money here. But what if they're at 6% or 8%? Can you still pay the bank? Or would you be forced to sell your property? And when you need to refinance right when the real estate market is down and you are forced to sell with a loss, your whole house of cards comes down, and comes down quick. After these bad news, we need some good news with mortgage mistake number 10, not securing government bonuses. There's a special payment when you have a Bausparvertrag. You can use your government bonuses from your Riester pension level 2 when you get a mortgage, and there are many different benefit programs from the KfW, the bank to rebuild Germany that is owned by the government. And when I say many programs, I mean many programs. They have something for new property constructions, for families with kids, for energy efficient renovations, for people with low income. So much, and it changes all the time. We check every time if our clients are eligible, because it's always nice if they can save some money, and make sure that your bank or mortgage broker that you're working with does that too. And last but certainly not least, secure yourself against emergencies. If you get a mortgage from a bank for hundreds of thousands of euros, they will get their money back in one way or another. Trust me on that one. So get a house insurance to protect your property, and get at least some insurances to protect yourself. Get a life insurance. You can use the calculator on our website for that. But make sure to pay attention to the tips in this video if you have a family. And the disability insurance can't hurt either, to make sure you can still pay your mortgage when you get seriously sick. Let us know if we can help you to find the best insurance, disability insurance, life insurance, whatever insurance in Germany for you. And please don't get this residual debt insurance that banks try to sell all the time. They cost way too much.